Hey YouTube, what's going on? Chris here. I want to bring you all an update, something that was on my mind. And what I want to do for you today, guys, was basically bring to you the three biggest mistakes that I've made in cryptocurrency, and I hope that you all can learn from them. So I've been in this space since about April, I think it was April or May 2017. So some of the biggest mistakes that I've learned in this industry: number one, trying to catch falling knives. Now, as a trader, like I said, guys, I'm trying to trade. I want to accumulate cryptocurrency. I think trading is very important. Now, if you want to be a long-term investor as well, have some certain coins you long-term invest, but I always think it's good to have a trading stash as well to see if you can increase your holdings. That's why I like to do it. But catching falling knives. And one of the biggest mistakes that I've made is sometimes there would be, like in Litecoin or whatnot, there'd be a 14-15% sell-off, and I'd say, okay, I need to buy that now, and then I would try to hodl that. And what would happen is we'd keep going lower. Those moving averages, we didn't have any moving averages crosses back to the upside. We didn't have any higher lows set, and basically I would just try to pick the bottom off one candlestick pattern. Like say it was a hammer candle, I'd try to just go off that hammer candle and then try to ride it back up. But what would happen a lot of times is you'd ride it back up to those moving averages, and then you'd see rejection because they're treated as overhead resistance and the trend is down, and then you'd get pushed down even farther. So what I've really learned is to wait to get back up above one of my short-term moving averages, have a candle close above that, then also put it in combination with some type of stochastic cross. So basically what I want to look for, guys, is an indicator with a candlestick pattern on a very important moving average closing up above it. So that's one thing I really want you to avoid, is trying to catch those falling knives and being a hodler with it. Now, if you just want to play a quick reaction, you know, guys, you can play one of those long hammer candles, ride it up for the day, and then get rid of it once you see we start to have a longer wick or some type of rejection up through the moving averages. So never try to catch falling knives. You always want to have confirmation. That's the number one thing for me. Number two is not waiting for that confirmation. That's very important, guys, because sometimes you'll just want to jump into things when you see it crash and fall down real hard. You say, all right, I have to go into it now, or I'm not going to have another chance at this. And a lot of times, guys, you have to let the market come to you. You don't want to chase the market, and that's something that I've learned. You know, I've chased the market before. I've FOMO'd, and that leads into number three. Number three is basically FOMO. And when I started out in this, you know, I thought that once a big price spike would come, that's it. If you didn't get on board, you're not going to catch it. But what we've learned in this space is there's huge upsides and then huge retracements, and it leads for a lot of opportunity. And for traders, that volatility is what we're looking for. That's what's so exciting. But in terms of FOMO, you're always going to have another opportunity, and I want to just point that out to you. Just like for Litecoin back in June there, guys, where we went from whatever it was, $63 all the way up to $145, and you could see it getting really steep, and we started to draw those trend lines. And once you start breaking through those trend lines, that's the time to get out, in my opinion, guys. That's just what I like to do. I've seen these trend line breaks to the upside and the downside. You can be talking anything from 25 to 60%. So I mean, look at Litecoin right now. We went from that 145, we're sitting down there at $66 right now. So that's the importance. Think if you took profit even around 135 or whatnot, and you've been sitting in cash and you've been watching these lower highs and lower lows coming in, and you're waiting for that confirmation, think how many more Litecoin you can accumulate. So that's why I'm trying to learn this stuff. I'm trying to study, but don't make my mistakes. So number one, trying to catch falling knives. Number two, not waiting for confirmation. And number three is that FOMO. Really don't FOMO into anything, guys. There's always going to be other chances. There's always going to be other opportunities. There's going to be new coins coming out. So just really don't FOMO into these things. And always, in my opinion at least, you always want to be up above that 200-day moving average if you're trying to long something. If you're shorting something, that's fine if you're below that 200-day moving average, but that's the long-term investors moving average that we really want to pay close attention to. So if you like these videos, guys, like, subscribe. These are just some of the things that I've learned that I've stopped doing because I've seen that it can be damaging. Unless, you know, guys, if you have one of those 15-20% falls and you just say, hey, I want to buy, I'm really holding this for 5 years, whatever, then do what you want to do. There's no problem with doing that. But if you're trying to trade and you're trying to accumulate, you don't want to catch falling knives, guys. My hands have been cut by them before. I'm sure your guys have as well. So none of us are perfect, and that's the trading scenario, guys. We just got to learn this stuff the best that we can. Okay? God bless each and every one of you guys. Take care.